Joining us on the phone now is Mr. Jim Hyerchek. He's the Chief Market Analyst at Brewer Investment Group. Jim, good to talk to you again.
Thanks, Dan. How are you?
I'm doing good. Now, Jim, it's been kind of an eventful week in the markets, especially where foreign currency is concerned. We continue to see a weakness in the dollar, which appears to be driving the stock market. How's that affecting the overall foreign currency exchange markets?
Well, what we have is a situation created by the Fed a couple of weeks ago when they decided to leave rates lower for a prolonged period of time. They basically gave traders, bearish dollar traders, a free ticket for the next 30 days to pressure the dollar. So over the short term, we're looking for the dollar to continue to weaken and all the currencies to rise against it. Over the last couple of days, we've seen the dollar gain back some of the losses that it's had, and that's basically just position evening and not necessarily a change in trend.
Okay. It's kind of interesting because, of course, the stock market likes a weak dollar. It helps multinational companies sell their products abroad. But speaking abroad, of course, we've talked about this before. China holds a significant amount of our debt. They keep buying the debt. And yet this week, the U.S. was scolded by the Chinese premier about our deficit. Do you see a possible change in Chinese policy with respect to U.S. debt?
I think what they're going to do is look at their balance sheet and see how much debt they really hold, how much U.S. debt they really hold, and they really want to start getting some honest answers out of the U.S. Regarding what they plan to do to cut back on this deficit spending. And that, I think, is the key issue. Chinese don't mind buying our treasuries because the sound investment. They just are concerned that at one point we may reach this default status, and I think that's what they're concerned about.
Well, Jim, of course, you and I for the last several weeks have been talking about the Forex markets. What do you see happening between the dollar and the yen, the dollar and the pound, or maybe even the dollar and the euro in the next several weeks?
Well, I think that the 150 barrier has proved to be a very strong resistance in the dollar, in the euro. I think that traders are afraid to expand beyond that area out of fear that the European Central Bank will intervene or issue some stern warning to push the market down. I also see the dollar getting against the British pound. Yesterday, the Bank of England stated that the road to recovery will be pretty rocky and that they favor a weaker currency and even pumping more money into the economy. As far as the yen's concerned, basically see a flat market. Both currencies have low interest rates, and in Japan and the United States, and so they're both being treated as a carry trade by the rest of the world. And I'd also watch the Australian dollar on the long side. If China starts to show signs of weakness in their economy, Australia, its biggest trading partner, is likely to suffer.
Once again, Jim Hyerchek, Chief Market Analyst of Brewer Investment Group. For more information, go to their website, brewerfuturesgroup.com. Jim, thanks again. See you next week.
Okay, Don. Thank you. Bye-bye.
Okay.